Greetings, Cretan learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be talking statement of financial position, but my focus is going to be on current assets. Did you know that by having an adequate amount of cash float, a business can promptly provide change to customers, avoiding delays or inconveniences during transactions? Here are today's lesson objectives. By the end of the lesson, you should be able to prepare the statement of financial position. You should also be able to do adjustments to the statement of financial position. That is, when you are given a pre-adjustment trial balance, you should be able to see how adjustments affect that pre-adjustment trial balance for you to be able to prepare the statement of financial position correctly. At this point, you should already know the format of the statement of financial position. Remember, you have your assets, which is then equal to your owner's equity and liabilities. Here are new words and language that I will explain in today's class. Fixed deposit maturing. This is when a portion of the fixed deposit, that is the principal amount, is returned to the investor. So you will see in today's class, we're going to talk about a fixed deposit, an investment that matures, and what we are going to do with that part of the fixed deposit that would have matured. We will start off then with our note 4. It is very important for you to understand that when we do current assets, we will look into 3 notes. Note number 4, that is our inventory note. We'll also do note number 5, that is trade and other receivables. Then we'll do note number 6, which is cash and cash equivalents. So to begin with, we will look at note number 4, which is our inventory. We are given an extract pre-adjustment trial balance of Tabo blankets on the 31st of December. We are given here in the balance sheet account section, we have trading stock, and then in the nominal account section, we have consumable stores. Here are the adjustments that we are going to be treating in today's class. Let's begin with the first one. It says, the owner took stock for personal use with a cost price of 8,000. No entry was made. We are going to record in note 4. So here is our note. To begin with, we'll take the amount that is in the pre-adjustment trial balance, 1 or 5. Then when the owner takes goods for personal use, we call that drawings. We will come and we will subtract that stock. That is why you see I say minus 8,000. The stock that the owner has taken for personal use is no longer in the business. Hence, we subtract it. That is why you see I say minus 8,000 over there. All right? And then we go to adjustment number 2. It says, a credit sales invoice of 16,200. So the 16,200 is the selling price. All goods are marked up at 50% on cost. Okay? So there's a credit sales invoice of 16.2 that was not recorded. A credit sales invoice of 16,200 that was not recorded. So we need to record this invoice. The first thing that I must do is I need to know what was the cost of the goods that were sold. So I'll come here, then I'll say it is 100 over 150. Then I multiply that by 16,200. When I punch that in my calculator, I'll get 10,800. When it is a credit sales invoice, it means we have sold goods. And when we sell goods, our inventory will decrease. And this transaction was not recorded. So I'll therefore come here and say minus 10.8 to decrease my inventory because there is a sale of goods that was not recorded. The next one then reads, the business has donated goods to Vow Children's Home, that is 2,400. that is the selling price, no entry has been made. It simply means we have to calculate again the cost price of the goods that were donated. So what we want is 100. What we have is 150. That is the selling price. We multiply that by 2,400. That is going to give us 1,600. When goods are donated, we record the donation on cost. So we will come here, then we subtract the 1,600. That is the cost of the goods donated. We subtract that from our inventory. All right? So all the adjustments that I'm dealing with were not recorded, and we have to understand how they affect our inventory. So the first one, the owner took goods, we subtracted. The next one, we sold goods, but it was not recorded. We have to get the cost. So we got the cost, we subtracted it. The last one, we donated goods. When goods are donated, we record the donations on cost. We subtracted the 1,600. We are now going to look at adjustment 3 and 4. But in our answer book, remember we had this from the trial balance, and we have already recorded when the owner took goods for personal use. We have already recorded the sale of goods, and we have also recorded the donation. Number 3, a fire in the storeroom destroyed stock with a cost price of 11,500. So when fire is destroyed, the total cost of the stock destroyed must be subtracted. So we know that the entire stock destroyed was for 11,500. So I'll come and subtract that 11,500. Even though the insurance company has agreed to pay 70 cents in the rand, so we will receive 70 cents in the rand. And then the 30 cents in the rand becomes our loss. This becomes our loss of stock due to fire. And this one will become the receivable amount from the insurance company. However, the entire amount, the full 100 cents, which is equal to the 11,500, must be subtracted in my inventory. The total cost of the stock destroyed must be subtracted. That is what we did here. Then lastly, it says, a physical stock taking on 31 December has revealed the following. So we have a physical stock taking, which tells us that on hand we have stock of 70,500. So we come, then we say there is our stock on hand. Then once we have done that, when we get the difference between 105,000 minus 8,000 minus 10.8 minus 1.6 minus 11.5 and the 70,500, we realize that we have 2,600, and once it's a minus, it becomes a trading stock deficit. Remember, this goes to your statement of comprehensive income. The 70.5, the one that is on hand, is what we bring as the final amount here in our note 4. Our note 4 will also be having consumable stores recorded in. Consumable stores, you find them in the nominal account section. So you have 12,000. This is the consumable stores that we purchased. We are being told that on hand is 1.3. Therefore, the on hand comes here in the last column. The 10.7 is what was used. And what was used is recorded in the statement of comprehensive income. So here we'll record the 1,300. So I'll then have my 70.3 plus 1.3, then I have my 71,800. That becomes my total amount that I will take to the statement of financial position when I am now recording under my current assets, inventory, note number 4. Dear learners, let's go for an end break and I'll see you shortly.